Good morning, Outliers. Welcome to today's Outlier Live, where we cover the biggest headlines today, what the AI trading data has to say about it. Our top story of the day is home foreclosures continue to rise. And that is definitely not a sign of a strong economy. Certainly not the sign of a soft landing. The second story of the day is Janet Yellen says the inflation decline might not be so smooth. Well, yeah, no shit, Janet. I think we're all dealing with a not so smooth inflation decline right now. And lastly, hey, I guess if you enjoyed watching TikTok, I feel bad for you, son, because you may have 99 other apps, but it looks like TikTok isn't going to be one. Tune in for that and more, all on today's Outlier Live. Sorry, that was terrible timing. All right, let's try that again. Home foreclosures are soaring nationwide, and they're rising the fastest in these 5 states. Is your state one of them? Let me know in the comments as we go through, right? Home foreclosures again rose in February as Americans continue to grapple with an ongoing cost of living crisis. It never ends. Every time we turn around, something seems to cost more. I know I'm up for renewal on my auto and home insurance real soon, and I'm not looking forward to that because we all know that that's going to be outlandishly more expensive. Okay, so according to a new report published by this real estate data provider, 32,000 properties in February had foreclosure filings. That is an 8% increase from the year prior, although it's down from the previous month. It is this uptick in foreclosure activity hints at shifting dynamics with the housing market. These trends could signify evolving financial landscapes for homeowners, prompting adjustments in market strategies and lending practices. Good morning, Brian. Thanks for watching live. So this makes me think. So my mother-in-law passed away in October, and we sold her home to Open Door. And that was a great experience. I'm telling you, like, we went on Open Door, they gave us an offer, we closed 30 days later. I mean, it couldn't have been a simpler process. And now her home is for sale, with a fresh coat of paint and a couple little odds and ends here and there, for like $60,000 more than what they sold it to us for. Whatever, that's them doing their thing. But they're already making price cuts, right? They Open Door are already looking at this market like, maybe this wasn't as easy to sell homes in this market as we thought it was going to be. Pretty easy to buy homes when people got to move them. But that is the exact reason why our family decided, let's just go with this offer. Don't worry about trying to get max value. Let's try and work on liquidity right away, because liquidity tops all. That's one of my important things that I focus on, is having the most amount of liquidity. And when you're in a house, sometimes it's not very liquid, right? And with that being said, right, there's a lot of people who are hurting in this economy, right? Let's see. Lenders repossessed 3,400 properties in February, which is absolutely crazy. The biggest declines, though, took place in Georgia, where foreclosures actually fell 52%, and New York with a decline of 41%. So there's a little bit of good news here. Foreclosures still surged in other states, like South Carolina surged 51%, Missouri 50%, Pennsylvania 46%. Texas only 7%, Indiana 0.8%. Although foreclosures are rising, they remain well below the levels recorded during the 2008 financial crisis. For now, right? For now. Housing affordability is at its worst it's been in decades, thanks to a spike in home prices and mortgage rates. And combine the two, I've helped push the typical salary required for home ownership. Okay, I saw this stat the other day and it blew my mind. The typical home ownership 4 years ago, you only needed $59,000 in salary to get it. 4 years ago. So 2020, like early 2020, you only needed $59,000. That's it. And now the typical salary required is $106,500. Yeah, you can tell me inflation's coming down, but you can't tell me when it costs 61% more to buy a house on your salary. No, it's not 61% more. That's not right. What is that? There is clearly an error here. So 106.5 minus 59 divided by 59. That's, did I do that right? Yeah, 80% more. You need to make 80% more to go from 59 to 106,000 to afford a home. That's crazy. That's so crazy. And beyond all that, nobody's salary is going up 81% in the last 4 years. Nobody. I don't care what industry you're in, unless like you've completely shifted your entire life. Nobody's making 80% more today than they were 4 years ago. Yet home ownership is costing you 80% more. It's crazy. Absolutely crazy. The average rate is now 6.74%, whereas it got as low as 3%. Like my house is 3 and 5/8, so a little bit over 3%. So where are the top states? Hang on a second. This page just reloaded. Home foreclosures are soaring nationwide. These states rising the fastest. Did we already say what they were? Hang on a second. This article is not well written. I guess it must be this, right? Yeah, I thought it was going to be like a list. Brian says, hey, you can now double the money. That's what I'm talking about. Jamie Dimon is. Yep. Okay, it must have been these states, right? South Carolina, 51%. Missouri, 50%. Pennsylvania, 46%. Texas, 7%. And Indiana, 0.8%. Yeah. So we got a lot of pain out there with home foreclosures for a lot of people. And that made me think of some bank stocks, right? So I want to look at Bank of America. Brian in the chat actually alerted us this morning to a sell signal that Brian, Georgia was one that we said, yeah. Brian in the chat just alerted us this morning on the OVTLYR platform. We got a sell signal for Bank of America today, in fact. And looking at the performance summary, we can see that OVTLYR had a 24% return, while buy and hold only has a 2.54% return, which is pretty sweet, right? So definitely check out OVTLYR. Oh, actually, head over to OVTLYRdeal.com while you can. We're in the last couple of weeks of getting this incredibly huge deal. This is like basically like a 99% off deal because it's a lifetime deal. And the only way you're going to get that is over at OVTLYRdeal.com, and it is going to be done very, very soon. So yeah, we got a sell signal today from a buy signal that happened just on January 31st. So if you're a Bank of America shareholder, now may be the time to get out, especially with a lot of these foreclosures happening. You don't want your bank taking those on. Let's go see what the internet has to say about this, right? Oh, I just learned that a young couple with 2 small kids are moving to an apartment. They moved to a newly built home 2 years ago. I kind of suspect that they can't afford it. Yikes. Yeah, that's not good at all. The Democrats love and embrace this. Let's not interested in this ad. Give me a break. But CO2s? Joe Biden did this. Hi, I'd like a wake-up call. Everything was better under Trump. Okay, I didn't know that was coming. That's pretty funny. So yeah, a lot of people are hurting out there as far as the home foreclosures go. And like Brian says, Georgia is definitely one of them. We've all been seeing the news that inflation's coming down, right? So the difference in what we need to see. So I did a little bit of research, right? We've got 2 different terms that we need to be looking at here. We've got deflation and disinflation. Disinflation meaning that inflation has peaked and every period it's lower, right? So we have seen disinflation. We've seen a 9% increase in inflation at one point, and now we're down to like a 3% increase in inflation. But keep in mind that while while disinflation is happening, prices are still not getting better. When it's 3% inflation, that still means 3% from a year ago when it was 9%. So you're stacking inflation at that point. We've yet to see any time of measurable deflation, which in all reality is what we need, right? If we're going to see deflation, right? If we're going to see prices come down in assets, right? And when we're talking about homes, when we're talking about autos, when we're talking about all these different things that generally you need an interest rate associated loan, right? And when the rates go up, the only way you can afford the loan is for the price to come down. The only way we're going to see that is for real deflation to occur. I was driving down the highway here in Dallas, and I saw a billboard outside of one of the main car dealers there, right? The car dealers in Dallas, you know, they have like 50,000 cars on lot, humongous cars. And this billboard out front said 24% off in 2024. And I was like, ooh, they're really hurting. If they're offering 24% off new Ram trucks or whatever it is, they must be really hurting. So Janet Yellen said Wednesday that inflation could face a bumpy return to normal after back-to-back reports showed price pressures within the U.S. economy rebounded at the start of the year. In a sit-down interview with Fox Business, Yellen pushed back against stagflation concerns and maintained that progress on inflation has not stalled. Let's take a moment to define stagflation. An economy characterized by high inflation, low economic growth, and high unemployment. That's not where we're seeing right now, because the employment rate is really low. But I think the employment rate is low in our reality because people are having to take more than one job. And you know what? It boggles my mind constantly is the employment number revisions. It's constant every single month. Pay attention to this stat from now on. I forget what it was. Forgive me. I just got back from vacation, but I heard a stat about last month's being revised, basically down the amount of the entire previous month. And this is something that I track because I find it really interesting. Every month, every time you see the inflation numbers come out, wait just a hot minute for the revisions, and they are going to be 50% or so of what the prior month's growth was. Meaning that if they say that they gained 100,000 jobs in 1 month and their revision was actually it was 100,000 jobs, the administration's lying to you point blank, and then they're having to cover their backsides by saying, "Oh, we're making a revision." I mean, there was at one point last year where it was 1 month was like 239,000 jobs or whatever, huge blockbuster month, and then quietly they said, "Oh yeah, but 175,000 jobs over the last 3 months need to be revised off." So basically, 3/4 of the jobs we said over the last 3 months never actually existed. So how can we trust this month? It's just continuous. So prices for everything, including groceries, new cars, and health insurance, surged in 2021 as a result of rampant inflation, which was caused by the COVID-19 pandemic. We all know that. And extremely tight labor markets increased consumer demand, fueled by stimulus cash. Inflation is falling considerably from 9.1%. This is what we're talking about. It remains above the Federal Reserve's 2% target. However, let's not forget that cumulative inflation is now up at least 18.5%. At least 18.5% in that time. So we're not out of the woods just yet. We're still fighting through this. Leo, good to see you. Welcome back. Thanks, man. Watch channel. Hey, good morning. High inflation has created severe financial pressures amongst basically all U.S. households, with more people having to pay more for necessities like food and rent. The burden is disproportionately borne by low-income Americans. Absolutely. So here's what I'm talking about, right? I'm glad this chart's here. I didn't actually know. I haven't read through this chart yet. So we're looking at this. And the inflation, yes, it has peaked, and yes, it has come down. This is the disinflation I'm talking about. So disinflation meaning that it is not rising, right? It's actually coming down. But the issue is that even though these numbers are down, keep in mind, this is still stacked. This is still cumulative from everything previous, right? So if we're stacking, and then we're adding 3% down here, that's still 3% higher, 3% higher, 3% higher. So that's how the cumulative inflation is still so much higher than what they're trying to tell you month over month. Man, there's lots of people who are actually out there fighting tooth and nail saying inflation's over. We won. We just did a clip a couple of weeks ago. Bill Maher, the comedian Bill Maher, who cares what he has to say, was talking all about how we've won the war on inflation. Jillian Michaels, of all people, the trainer from Biggest Loser, was like, bro, what are you even talking about? Right? The inflation number may be down, but overall, things are still so much higher. Yeah. Although there have been some signs recently that inflation is proving to be stickier than expected, Yellen has pushed back against these woes. Keep in mind, this is the woman that said inflation is transitory. Keep in mind, she was 1,000% wrong. Inflation is transitory. Now she's saying, oh, yeah, of course it's not going to be sticky. So listen, whatever she has to say, I don't believe it for a second. I don't think we're going to see stagflation. Most forecasters believe we're on a path where inflation will come down over time. Well, by God, I hope so. Yellen said that she expects the cost of rental housing, which is one of the largest drivers of inflation, to fall in the coming months as tenants sign leases with lower rents. Bro, how are tenants going to find those leases with lower rents? Please tell me, if you're out there trying to find rental units right now, where are you finding them? Put them in the comments. I'm sure a lot of people would like to know. Put in the comments, where are you finding lower rents? Because I'm sure that that is not a thing. Trust me, those landlords, they're looking at you and they're saying, I have to live month to month from your paycheck month to month. And I am not at all going to take a pay cut because I know for sure you aren't out there taking pay cuts. So there's nowhere that a landlord's going to be lowering that. I have every expectation the single biggest contributor to inflation is going to be moving down this year. Give me a break. Janet is as accurate as the local weatherman. Maybe so. Now, here is a stock that I think has a lot to do with inflation because I just got back from Disney World yesterday. And so I want to take a look at the Disney World signals here inside of OVTLYR, right? In fact, we can zoom in just a little bit and see we got a sell signal for Disney on February 27th. And that was coming on the back of a January 29th buy signal. And in fact, following these signals, oh, wow, look at this. OVTLYR shows a 19% return while buy and hold is down 24.46%. So having these OVTLYR signals in your back pocket is absolutely one of the main things that you need to do to stay active and to stay current and stay on top of things in this market. Now, I would definitely recommend you heading over to OVTLYRdeal.com. We have a sale going on right now. It's basically 99% off a lifetime license, and that will be ending here in the next couple of weeks. So like I say, a sell signal on February 28th for Disney. So if you're a Disney shareholder, inflation may not be benefiting you, but I tell you what, I certainly helped benefit the bottom line of Disney this quarter, without a doubt. Janet Yellen warns inflation decline might not be smooth. This person says, I had respect for her as Fed chairperson, but she's a sellout, a pure politician. All right. Yellen's been talking about a soft landing now for years, and all of a sudden, we've lost the smoothness. Well said, Stephen. She's giving off some real Jim Cramer vibes right now, where everything is the opposite, right? I suggest that inflation is now, and this person says, I suggest that inflation is now built in, and there's a risen floor to it that has nothing to do with what the government wants. There is a risen floor to this. Absolutely. Everybody sees that, right? You're getting used to paying these higher prices, but we as consumers can fight back. We as consumers can say, I'm not going to go to McDonald's. I'm not going to buy the $18 Big Mac meal. Bro, I could go to Chili's and get a meal for $18, probably including a drink. So we can fight back against this, right? But it takes us consumers to actually do something about it. Stop paying those high prices. Brian asks, what's the blue line in OVTLYR? So the blue line in OVTLYR is our directional price trajectory oscillator. This is probably, Brian, the most important signal inside of OVTLYR, because when this is moving up, you can be looking for an uptrend inside of on the price. When this is moving down, you can be looking on a downtrend in price. And if you look right here, it's starting to trend down. The line is not super easy to see when you're zoomed in like this, but if you zoom out, it gets a lot easier to see just how much that line is starting to come down. So absolutely, that price trajectory oscillator is the blue line inside of there. And I just love this zoom feature. This 2.0 upgrade just came out today. So I am so excited for everybody to have access to this. So yeah, we have some issues, definitely big time. And might it not be smooth? Yeah, I don't think this inflation is going to be all that smooth, Janet. So I somehow managed to not see anybody making TikTok dances over in Disney World, but there's this one TikTok dance. It's like captivating to me. I don't understand. Hang on, let me Google it for you. It's this Disneyland TikTok Thor. I don't know if that's actually the hang on. Long hair guy. This TikTok like freaks me out because it's so captivating. Long hair guy dancing Disney World. That's the guy, but that's not the one I wanted to see. Hang on. Yeah, anyway, we're not going to go down that rabbit hole. Either way, there's this TikTok of this dude dancing at Disneyland. It's like captivating. I don't understand why it's so captivating. But I didn't see anybody doing that while I was at Disney World. But there definitely were plenty of people, scrolling on their phones, looking at TikTok instead of taking in the sights and sounds over there. And they may not be doing that for very long. Forced TikTok sale could absolutely happen before November election. That's pretty interesting, right? The TikTok risks grow as November election draws nearer. A forced sale of TikTok, the social media app, that U.S. intelligence have labeled as a security risk could happen before the 2024 presidential election. These two House committee chairs appeared on the CBS Face the Nation after the House bill passed last week that would block TikTok from the U.S. app stores if parent company ByteDance, which is linked to the Chinese government, does not divest from it within 165 days. That's pretty interesting. That's pretty crazy that they're actually going to force a divestiture from TikTok. When asked if a forced sale could happen before the elections, this person says it absolutely could happen. And I think all the more reason we have now to tackle this is the closer we get to an election, the risk just gets greater and greater. I think the real risk is disinformation or malinformation, right? Or what are they? Hate speech and all that crap that they want to label everybody who is not a far left crazy person. I think we're going to see a lot of issues in the very near future with AI, right? Because they can make some really convincing, AI made generated videos at this point. And it's not going to take a genius to figure out, oh, hey, we should have them say some crazy crap and have them do it right before the election so they don't have time to disprove that the fact that he didn't actually say this, right? Either Joe Biden or Donald Trump could be the target of these smear campaigns where they just outright create videos, create hate speech using their image, their likeness, and then it gets spread all over social media. Dude, I could see that happening in a blink of an eye. That scares me more than TikTok does, right? The fact that they could absolutely just make up anything. There's no way. This is a problem. TikTok's critics have long called it a national security threat. They have cited concerns about the Chinese government ability to leverage its power over ByteDance to access sensitive user data, something the company has denied. Every single intelligence community official has testified before the intelligence committee last week and suggested that its current ownership structure, TikTok, is a threat to national security, which is why we're trying to force TikTok to separate from ByteDance and by extension from the Chinese Communist Party. Ooh, interesting, right? Brian says, China is hypnotizing you. Brian says, will China penalize U.S. companies operating in China? And what would that fallout look like? Dude, I think so. But I've heard some crazy conspiracy theories that TikTok is like a psyop, right? Where they're having the youth get indoctrinated and they push these crazy people on TikTok, right? I mean, you've heard of the trans movements, the everything else movements, where like it wasn't a thing a few years ago, and now it's mainstream. And they made it mainstream because of the TikTok algorithms. And so that really concerns me. It's like, without TikTok, would we see these many people who identify as, LGBT, whatever? I don't know. I saw some stat that said 50% of this particular age group, I forget what it is. It was like high schoolers in California identified as somewhere along the LGBT spectrum. And it's like, dudes, for real? Clearly, there's some social contagion going on with this. The likelihood at 50% of this demographic falls into that is almost impossible. Unless you have something like TikTok's algorithms that are pushing it day in and day out on these impressionable young minds. That scares me. That scares me a lot. And I think that there is some truth to the fact that China's version of TikTok is all engineering, STEM-based, math, technology, engineering, all that kind of stuff, which is cool, right? I love watching that kind of stuff on the short videos. But then on our side, you see degeneracy, you see all these different kinds of different lifestyle choices that these people may not have even heard of. Yet they're being presented to them right inside of their feed, right on their phone, and the most like connection as possible, right? It's not like a TV that your mom and dad put on when we were kids, right? Where you're watching DuckTales, right? It's these people who are trying to influence how you live your life. You live your lifestyle for the rest of your life and are trying to get you to take these changes that you may never have wanted to in the first place. And these algorithms continue to push that. If they didn't push that, we wouldn't be knowing all about this. Brian says, we stopped having people read and now they just follow. Oof, well said. So I don't know if all of that part all the social contagion part is really something the Chinese government's putting on. I could see it. This video is probably going to get flagged because of it. I don't know. But I could totally see that being a thing. So if they do sell off TikTok, does that actually change anything? Right? If they do sell it to whomever, right? I remember when Trump was in office, he was trying to sell it to Microsoft or something. I don't know the details about that, but let's say that Microsoft did take ownership of TikTok. Do they change the algorithms? Do they have control of that? Or does it just continue to go on? I don't actually know what the difference is going to make. But the sale seems like it might happen before the election. And at this point, I don't think that TikTok is going to be able to stop this, especially when we had this happen 4 years ago. We're having it happen again today. I don't think there's any way that they're going to be able to stop this. And if you disagree with me, let me know in the comments, please. But if they do make a sale of TikTok, that could absolutely hurt it. And people might flood over to Snap, right? Remember Snapchat? Remember that old thing? We actually got a sell signal on Snapchat on March 15th. So just last week, we got a sell signal for Snapchat. And I mean, I could absolutely see the youths heading back over to Snapchat if the TikToks went away, right? And OVTLYR actually has a 40.04% return for Snapchat, or buy and hold is 25.87. So Snapchat absolutely looks promising whenever you're following these OVTLYR signals. Like I said, we got a sell signal just last week. So if you want to get your hands on these signals like this, be sure to head to OVTLYRdeal.com while you can. Just a couple of weeks left of this lifetime deal that will never, ever happen again. Basically 99% off these signals. So head on over there right now. Breaking: U.S. House officially passes bill that would force TikTok sale or face a ban. Imagine if they released the Epstein client list just as fast as they voted for this bill. Okay, that was pretty funny. Let's go on here. First TikTok, then X. Ban TikTok legislation, ability to ban everything. Congress. I don't know. That's not such a crazy idea, right? Just a Trojan horse right there. Basically, government. We should be able to determine what counts as disinformation. Also the government. All these different things. That's pretty funny. They're using TikTok as a veil to their true intentions, manipulating the narrative to push towards their desired agenda. Absolute control. Those who give up liberty for the sake of security deserve neither liberty nor security. Ooh, not exactly what I expected out here. People are saying, don't take away my freedoms, bro. Because if you're taking that away, what else are you going to be taking away? Hey, do me a favor. Up above, there's going to be 2 videos from YouTube. YouTube thinks that you're going to love watching more. So click one of those to watch more, and I'll see you on the next episode. Talk soon.